Hello traders, Gary Wagner, just about 11 o'clock in Honolulu, 5 o'clock in New York on Monday, September 28th, and this is Trending Markets. Sharply, brutally lower pricing across the board in the commodities complex, along with the U.S. equities markets. Dow Jones Industrial Average closing off almost 2% on the day, right at around 16,000. Very, very tenuous move in the market, off about 312 points. Standard & Poor's, when we look at that particular market, off 2.32%, down 44 points at 1874.75. Now, in terms of the marketplace itself and the technical studies that we have been looking at, what we have been talking about is a basic wedge or compression that we have seen within the marketplace, and a basic break that we noticed at the probably around the middle of last week. In fact, let's go ahead and pull that chart up. And traders, this is the chart that we have been looking at throughout last week, and we'll look at it again this week. And we talked about the fact that we saw really an ascending set of lows coming into the market and pretty much a flat top. That's a flat top except for this shooting star that appears really at the top of the market now that we look at it in hindsight. We talked about the fact early last week that we actually broke below that particular price point, because up until then I had been postulating that we might in fact see this market move higher. Once we broke through this though last week, I really looked at the evidence available to us, and from that really capitulated that we will probably see this market break to the downside. We've certainly seen that happen today. We now have equal lows, and you can really see that on a weekly chart, but even on a daily chart you get these matching lows here at around 16,000, and whether or not this holds is going to be a very, very important piece of information over the next couple of days. Not the next couple of weeks, but the next couple of days. I think that if we break below here, we will probably take a stab at these most recent lows down below 16,000. In fact, roughly at 15,300, roughly in that area. Of course, when we look at some of the other technical indicators, we talked about the MACD also. We talked about the fact on Friday that we had really seen the momentum moving down, although at that point it wasn't negative. Well, guess what? Traders, today it went negative. We also talked about the fact that we had the short term, this blue line, crossing the longer term here in terms of the moving averages, and in fact we did get our cross today. So when we look at all the data available on a technical basis, it really tells us that we could in fact be looking at this market going lower and potentially much lower, meaning going back to those most recent lows. This is a basic stochastic indicator that we're looking at, and that is certainly crossed. Typically, you want to see that cross at 80 or above to actually take it, such as you get right here. And in fact, we'll go ahead and line that up with our other chart so you get a better idea of when that came in. And traders, when we do that, I've just gone ahead and pulled the chart back up and aligned it so you can see where this 80 came in. That's just prior to this major sell-off that we witnessed in the market as it came down here. Stochastics did actually give you a pretty fair warning of that fact. So traders, I've just gone ahead and pulled up the S&P, the E-mini, and I have added one basic fib retracement to this set of studies that we have here. And what that looks at is simply the rally from the bottom of this market after falling out of grace, hitting these lows, 1831, up to this shooting star right here. And what is really concerns me is the fact that when we do that, it plowed through the 61% retracement, really like a hot knife through butter. But the key area that we would want to see the market hold, which is that 78% retracement level, we've actually closed just below that point at 1872. And that would be the last island of support that we would look for in the marketplace itself. And the fact that it has closed below that is absolutely foreboding and tells me that we could see this market drift lower, not only drift lower, but drift back to these areas that it hit following that tremendous sell-off that we saw just a few weeks ago. which brings us to the next market that we've really been looking at, which has been the crude oil market. You know, the crude oil market, which had been extremely volatile, is now really kind of consolidating. Now, when we look at this, we've got this pennant formation forming. We've got a series of lower highs that are coming into the market. It's almost a flat top, but if we take into account this high here and the most recent highs, we're definitely ascending. We're also looking at a marketplace which has a defined almost flat bottom, and more importantly, we're coming to the apex of this particular compression triangle. We haven't seen a compression triangle in oil. What we have been seeing is really the market spike up or spike down and consolidate before making its next move. Now, my feeling was that we were seeing some sort of consolidation pattern, but the fact that we're seeing a compression within the range itself tells me that it is setting itself up for a major move, whether that break is to the upside or downside. The most important thing that I can stress right now is that we will see crude oil have a major break in terms of price. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for another Trending Markets. Bye-bye.